All right, all right. I'm gonna go ahead and get this started here. Appreciate everybody who is joining here on this Monday night. We're gonna do a lot of introduction to SMC analysis today. A lot of concepts, a lot of teaching today that we're gonna go through. At the end, if I have time, then I will definitely look over our current analysis, our current trend, what we're looking at for any types of trades, taking anything to the upside or the downside for Bitcoin and Ethereum specifically. But we're going to go ahead and get right into this today. So we're going to look over Wyckoff. We're going to look over the understanding of how supply and demand is created. We're going to talk about liquidity concepts, meaning when do I target certain liquidity, what liquidity is most important, and where. And then we will also talk about how we can continuously stay on the right side of the market until we are proven wrong, right? And that's going to allow us much more profitability, much more understanding when we start to just study one or two pairs at a certain session time or just in general, right? And we're looking for the same type of behavior over and over again as far as entries go. So on our last Wyckoff analysis that we did in our last Intro to SMC class, we talked about reversals. So we talked about accumulations and distributions, how we could look to spot them, the behavior of them, how they are formed, right? And how we can look to trade and capitalize off of that. We talked about those reversals. Now with the continuations, we also did a little bit of analysis on continuations, but we did not do much with candlesticks. And so I kind of want to show that out today, show some candlesticks, show some entries, how we could get into trades using continuation Wyckoff theory, understanding where that comes in place and where that goes. So let me go ahead and get this started with our continuations. We have two continuation schematics, right, that we see as far as Wyckoff goes. I say two, there are millions out there. There are millions of schematics, people drawing up certain things, right, for the labels as far as that goes. But myself, I like to focus on behavior. And the reason I like to be focus on behavior over labels is because labels got me into a sense of a pattern trading mindset. And what I mean by that is there would be certain situations where you could go over here, right, and label an accumulation within this area right here, and you're holding your trade to the upside, right? Trying to take it to these highs or these highs or these highs because you think it's going to reverse because it's an accumulation, right? You don't have that full market structure confirmation. You don't have the full confirmation of that introduction of algorithmic liquidity to the upside within the scenario. Everything is not there. All we did, right, was break down from our most recent redistribution where we created supply. We came back up into that area, right? And then we saw the lower high and the lower low form directly after. So understanding that Wyckoff on its own is just as good as a cup and handle. Wyckoff on its own is just as good as a inverse head and shoulders, right? Because those scenarios, those patterns hold probability, meaning, for example, a cup and handle, this is just off the top of my head, right, but holds a 60% win rate. So if you see a cup and handle, you have a 60% chance of winning, a 60% chance of losing within that, or sorry, a 40% chance of losing within a cup and handle trade. But that 40%, right, is pretty massive. I don't want to bring it out to that type of R&R, right, because that would equivalent to something as a 1-to-1 R&R or 0.5 R&R within these scenarios, because once you start to get these patterns in place, right, these patterns in your mind, then you start to see them over and over again, and then you just start to go for it. But we need to understand, right, as institutional traders, we have a system in place, a stepped system, right, in place. And what this is going to do is allow us to have all of the confirmations, not just Wyckoff theory, not just supply and demand, and not just the market structure, because all of those are manipulated on their own. So like we know, we need to use multiple confluences to be able to enter our trade. Therefore, we have a higher probability of success, right? So what I mean, when it comes to continuations, there are two, wherever this went, okay, here we go. But there are two schematics that we look for. One is reaccumulation, and I'm going to go ahead and put this down now. We have reaccumulation, and then we have redistribution. So we understand that following an accumulation schematic, we have the reaccumulation schematic, right? The area where we have our accumulation, right? Let's just draw it out. We get the break with impulse, right? And then we have that reaccumulation. So in a lot of these senses, in a lot of these cases, if you're just using market structure and just using supply and demand, you're left behind. Why are you left behind? right? Because you are looking at something like this, looking for the next lower high, or sorry, higher low for the continuation to the upside after demand mitigation, right? You have your demand down here, price moves up, and then you're left behind. And you're sitting there like, well, what was I not looking for? What did I not understand? How was I able to get into this trade? Or how was I able to miss this, right, within this scenario? We need to understand the continuation that happens. Now that we have this break of structure to the upside, the higher low can be formed within this entire area. So we look for the demand within this entire area, and if it does not mitigate it, right, and it shows this reaccumulation behavior, reaccumulation is the creation of demand. So we are actually creating demand within this area right here by liquidating longs and breaking structure to the upside within this area. So what that does is now introduce new demand. So this is actually our most recent demand versus this candle down here, right? This area down here. So now that we've liquidated longs, broke structure to the upside, we now have the higher low in place because we have introduced demand. That's how our reaccumulation comes forth, and that's how we see the continuation. Many people are left behind, and many people are stuck shorting within this area right here. They want to take it to the downside, right? But understanding in these scenarios, these continuation scenarios, you will be left behind if we use just that, just one type of confluence, right? If you're using just a singular confluence every single time, then that's going to bring, right, that analysis paralysis where you are believing that you're wrong, right? You believe that your way of trading is just not right. And then you just think that everything is wrong and everything starts to blow up, right? And then you get in that losing cycle and then it's just over, and that's where people quit. But understanding that these scenarios occur is going to bring much more clarity within your trades, within your analysis, within your candlestick analysis as well. So I'm going to go ahead and delete this. We'll talk about reaccumulation, how it forms, and then we will also talk about redistribution and how it forms, and then we will go to some chart examples with some most recent charts, right, that had just occurred, so then we can get that understanding of, oh, this does happen every single day, and this doesn't just happen at certain times or with certain things. Like, with Wyckoff, it happens in every single trend. It happens in every top. It happens in every bottom. It happens in every single continuation. If it's not on the 4-hour, it will be on the hourly. If it's not on the hourly, it'll be on the 15. You can go down time frames and you can start to see the fractal nature of how this Wyckoff starts to come to place. So what this means is, for a reaccumulation scenario, after our accumulation, right, our break of structure to the upside, and we have created demand, we are looking for a reaccumulation. So what does a reaccumulation mean? How is it formed? And what does it look like? What it looks like is going to be the most important thing to me. So a reaccumulation is going to look like a distribution. Instead, it turns into a cum. So let's just make this smaller. Let's make this 12. Let's put this down. For a reaccumulation, it looks like a distribution. Instead, it turns into accumulation. So what does this mean, right? So with the distribution, what do we look for? We look for the manipulation of highs while we leave lows, right? So within a certain scenario where we get the break of structure to the upside with impulse, right? There's our break, there's our impulse, market structure has shifted. We're looking for the bullish higher low confirmation, right? So what happens within the scenario? So we get that manipulation of highs, right? As we're coming within these areas, we take out the highs, and then we see the lows that are being left for the distribution. Once the distribution occurs, we have our final LPSY, right? And then we get the liquidation of the lows. Now we are we're starting to come within discount of this area right here, creating highs and lows, right? And then we get the break. And then this is where that demand is introduced, and you now have your distribution to then accumulation, manipulating lows, leaving highs, manipulating highs, leaving lows. Continuations are going to be the hardest schematics to play. You can ask any smart money concept Wyckoff trader. Continuations will be the hardest because they hold the most components. For a distribution, I'm just worried about manipulation of highs and leaving lows, right? For just an accumulation, I'm just worried about manipulating lows and leaving highs. For reaccumulation, I need a break of structure to the upside, looking for the distribution, looking for the rate of the lows, looking for the break of the structure, looking for the demand creation, and then the continuation. We can see how there's already just more work that needs to be put into place for these continuation scenarios and why these are the hardest to play, right? So for a reaccumulation, we have our distribution to then accumulation, liquidation of the lows, break of structure to the upside that creates demand, and then we get that final continuation overall. So now you have overall, right, your higher high, higher low, continuation after your break of structure over here. Impulsive move, higher low, continuation to the upside. So now understanding a redistribution, same exact thing, opposite. What do I mean by this? It looks like an accumulation. Instead, turns into redistro. We'll put this as a distro just to make it simpler. But for a redistribution, same exact thing as reaccumulation, but the opposite. That's what is going to be simple as well with these concepts to keep it simplistic as possible when you guys are looking to trade these. But understanding that a redistribution is going to look like an accumulation, but instead turns into distro will help greatly. Now, what does this mean? Same exact behavior, but literally flipped. I can show you a reaccumulation on the chart, invert it, and you will see a redistribution. So understanding what that means is we now have a scenario like this, right, where we are creating higher highs, higher lows, starting to come up. We get a large move to the downside, and then we get that break of structure, right? You have your area of imbalance, your fair value gap as well, and you start to manipulate lows. You're leaving highs. And then you take out the highs. What does this do? Get all of retail, right? Get everyone who is trying to breakout trade to take this to the upside continuously, whatever it is. They see a breakout, whatever it is, right? But then instead, we start to manipulate highs, leave lows, and instead distribute. Right, so we have our accumulation to then distribution after we take out the highs. With this scenario, after we take out the lows, we introduce demand. With this scenario, after we take out the highs, we introduce supply. Okay, so these entire areas are going to hold much confluence as far as demand and supply goes. This is how demand and supply is created from a continuation perspective. We'll talk about how it is, the details of how it's created within these candlesticks on lower time frames when I get to that point. But right now, we're just understanding the behavior. So we ran the highs over here, right? Ran the highs, broke structure downside, introduced supply, mitigated that supply, and then we continued to the downside. So instead of coming back up to these areas like we were talking about before, how many see this large impulsive move and immediately go to this area right here, say consolidation before the breakdown, this is my supply zone, right? And then they get into these areas or these instances where they have this supply zone, but instead we create new supply, right? So then the next time price comes back up here, if we reverse whatever it is, right, the supply will not hold true to this narrative right here. It'll now hold true to a different narrative, meaning if we have switched bullish, this supply could easily, right, produce a move that turns into a reaccumulation. So we need to use the most recent demand, the most recent supply for our narrative as far as that goes. But understanding that these concepts, right, are literally the same as putting on an inverse head and shoulders or putting on a cup and handle or doing any of that if you do not pair it with other confluences. If it is simply Wyckoff, you are pattern trading. So understanding reaccumulation, liquidation of the lows, introduction of demand, break of structure upside. Understanding redistribution, we take out the highs, introduce supply, break structure to the downside. With a reaccumulation, it looks like a distribution, instead turns into accumulation. With redistro, it looks like a cum, instead turns into distro. Something too that we need to note, and something that is going to be very important, is reaccumulation creates demand. So let's put this down. So on lower time frames, this entire area will look like this. On higher time frames, it may look like this, right? A move, then a base, and then the continuation to the upside. On higher time frames, it'll look like this. On lower time frames, this is what is happening. What is this? What do we look at this as? Your rally base rally. So we said this creates demand, right? After we broke structure to the upside, we see the demand, we see the continuation. So if we create demand, I now have a rally base rally, an area of demand to look to possibly buy if price comes down, right? Mitigates it and then shows that continuation. So now we know where demand is created on continuations. Now we know where supply is created on redistributions. Let's see what this would look like, right? Same thing. Drop, right? Drop, base, drop. Your base is your Wyckoff. This is what's happening within your base. Your reaccumulation within your base is this. Your redistribution within your base is this. Drop, base, drop, rally, base, rally. So that's where those terms come from, and that's why they make sense, right? So now we know that these create supply. So I have an area of supply to look for price to come back into, mitigate, and continue to the downside. So now that we have talked about the behavior of everything, now that we have talked about all of the behavior as far as the continuations go, we understand our reversals, right? Now we understand our continuations. So let's go ahead and now look at this on a chart. So I'm going to go ahead and delete all of this right here. Let's get rid of that. And then let's look at this on a chart. We talked about this distribution right here, right? We talked about this redistribution, how that occurred, why that made sense. And then if we notice, right, on higher time frames, again, your drop, base, drop. We created supply within this area. What was the job of this internal supply? Mitigate and continue to the downside and mitigate this demand. I personally believe every single move happens for a reason, right? And it is going to show that as it comes to play. I'm going to go ahead and look at my ads now. Nothing so far as questions go. Again, if you guys feel free, or if you want to ask questions, feel free to unmute your mic and or just at me anywhere. I'll go ahead and answer those for you, get those done. Like I said, if we got time at the end too, I'll go ahead and look at some charts. But as far as the understanding of rally-based rallies and continuations, drop-based drops, right, where we can look to play them, and where they make sense, it's going to be on those areas that hold high value after your breaks of structure. So after you have your accumulation, right, let's just bring this back, put this in replay mode. After we have our accumulation to the upside, right, we have our breakout manipulation of the lows. We left the highs. We broke structure to the upside. Where was our next area of demand to look to play? Many look at this and they automatically put something down here, right? Maybe they mark out the entire zone and they say, oh, it's going to come down to this area, create a higher low, continue to the upside, right? But what they don't notice is on our daily time frame, we see a rally, we see a base, we see a rally. Okay, our base, this doji candle that lies here, means that price was pushed up, price was pushed down, and then it closed equally. So what that shows us is that there was some type of liquidation or consolidation within this area, right? Our base. So if I go on lower time frames, I'm looking for the reaccumulation. Again, exactly what we just showed you, but now this is going to be shown on a lower time frame with candlesticks. So now we're on our daily chart. I'm going to go ahead and just mark out this entire area right here. We're looking for reaccumulation within this area. Let's go to a lower time frame. Let's go to the 4-hour time frame, right? Do we see that reaccumulation? Do we see a manipulation of lows and a break of structure upside? I see a manipulation of lows here. I see a break of structure to the upside with impulse here. I see another manipulation of lows here. We can see this wick close underneath, or came and licked these lows right here. Liquidation, break of structure internally, move to the upside. Let's go on our lower time frames to see what that looks like. What are we looking for? Raid of the lows, break of structure to the upside, and the continuation. So here's our raid, and then we get our lower time frame break within, and then we get the continuation. You understand at this point, right, we've already broken structure and been bullish on all time frames up until here. So I'm looking for lower time frames. But again, where's our liquidation raid? Right here. Where's our break of structure? This low caused this new high. We broke structure to the upside right here. Where's the liquidation rate? To the downside right here. And then we get the final confirmation. 1, 2, came back into those areas, liquidated, broke structure to the upside, and we now have our candle before the candle entry. All right, following this break of structure to the upside, institutional candle as well, clean institutional candle on the 15-minute. And then we see that final continuation. So this is how demand was created within this scenario. But from a retail perspective, what are they doing? They see this, they see manipulation of highs, right? And then they automatically look left. Right? They automatically look left over here. And they start marking out zones and saying supply zone or fair value gap or drop base drop, right? All of these areas that they are trying to short off of. This is what happens, and this is why we see that continuation, the reasoning after we liquidate the lows, right? We continuously, if we look at this from a market structure perspective, right, we didn't violate any lows that caused new highs, meaning this is your lowest low that caused this highest high. Was it violated? No, just put in a higher low. What did it do? Put in a higher high. What did it do? Put in a higher low. What can we look for? Continuation, right? Or the liquidation of lows. And we come down into this area, that rally-based rally that we were talking about, and then we get the continuation. So everyone is shorting this, right? As supply or whatever they have, right? They are shorting this, trying to take this to the downside. They are giving us now reasoning for price to continue to the upside. So let's look like what that looks like here. So now that we have our lows that are being formed, we see highs manipulated, right, within our area of supply. We have our area of demand as well. Remember that rally-based rally that we had talked about. You can use the entire area as an area of consolidation, or the candle before the candle that broke structure with impulse as well. But let's go ahead and look at this, right? We understand we came down. What is retail doing at this point in time? They see this, right? And they see this move off of this zone. What do? They short it, right? They're continuously trying to take this to the downside. They are trying to short this at this point in time. But we understand where demand was created. We understand where, right, that liquidation and break of structure occurred, and we are understanding that if we come down into these areas, we can see and easily see, right, that continuation to the upside following. So let's see what happens when we come into our rally-based rally, right? We come into that area, and what do? All shorts gone, right? Within, let's look at the timing here. Within 1 day and 6 hours, right? Your shorts that were trying to take this to the downside for roughly a week, right? For roughly a week that we're trying to take this to the downside, all taken out in a day. Okay, that's how we can see now as well what side of the market we are on. Where is price moving and where is it moving quicker? Okay, price was moving quicker to the upside. Look how long it took price to reach these levels of demand. What does that do? That tells us that buy side liquidity is being induced, right? That we are engineering that buy side liquidity within this point in time. So now that we have liquidated the lows, right? We took out the lows. Now all longs are out of the market within this structural time frame right here. All longs are out of this market right here. Once the longs are out, we mitigate what caused our break of structure to the upside, our area of demand, right? And then we see the continuation. So now it's just a simple higher high, higher low, continuation, right? So this is where we can get into these scenarios to where we're not stuck looking at this zone or these zones, or even trying to short this the entire time, right? Because now we understand the narrative. Now we understand where liquidity is being taken. Now we understand where that demand and supply is being introduced, and now we can look to capitalize off that. So this was a reaccumulation scenario. Let's go ahead and play it out. Rally-based rally, right? We're looking for the second rally. What do we receive? Another rally. Now we have our rally, base, rally, right? So now within these scenarios, I'm understanding this much more, right, to be an introduction of demand than I am supply. Because we understand that for however so long, right, we've been creating this downtrend, coming to the downside, taking out lows, and then we finally, right, show that accumulation and break structure to the upside. What do we look for following an accumulation, right? That reaccumulation. What occurs? That reaccumulation. Now all of these shorts that were trying to take this to the downside from May 30th, right, have been taken out of their trades. So what does that do? That all of these shorts have now been taken out of their trades. That provides, right, the ability for algorithms and institutions to now enter short side, right? Now we can see how the market moves. Lower high, lower low, came back up, created a lower high. We can look for a possible internal lower low. We created demand within these areas, right? If price comes down to these areas, liquidates the lows, then breaks structure to the upside, then it could be more accumulation behavior. But within this scenario, now that all the shorts are out of their trades, now we see the retracement. Right, now we can see from a higher time frame scale how this works. We'll talk about liquidity concepts in a second as well, but I want to get into the drop-based drop, right? The redistribution, how that occurs, how we could look to play it. But same exact scenario here. Same exact thing we are looking for every single time. Liquidation of the lows, mitigation of demand, break of structure to the upside. The demand is created from that reaccumulation that occurred that we were talking about, right? Let's just play this out so that I can get out of this replay. And we can go to a drop-based drop example, right? So for the drop-based drop, like we were talking about, same exact thing as our rally-based rally, but it's going to be opposite, meaning instead of the manipulation of lows, right? Instead of the break of structure, distribution, manipulation of lows to then accumulation, break of structure, and continuation. Instead, we are seeing the opposite. So drop, we accumulate, manipulate lows, leave highs, take out highs, create supply, and continue to the downside. With redistributions and with reaccumulations, right? It doesn't even have to violate the lowest low, meaning this high caused this low, right? And we ran this high. So we took out supply, continued to the downside. You'll notice that it still holds the bullish or the bearish structure overall, and that's what's going to be the most helpful when looking to take these continuation trades. So for a redistribution now, I actually want to go to Bitcoin as it showed one of the cleanest ones. But within these scenarios as well, for a redistribution, our drop-based drops where we could look to take trades to the downside, right? We talked about this redistribution here, but I'm going to just go ahead and show it real quick. Where's your accumulation, manipulation of lows? And then we take out the highs, right? Mitigate supply and continue to the downside. Let's look at the structure that we have created within this area right here. Let's look at the premium and discount. Let's look at where we could look to possibly capitalize off of this, right? So this is your highest high that caused your lowest low. So let's look at the market structure as this is playing, how we could look to capitalize off of this. We can go on a higher time frame. Yeah, 4 hour. Okay. So let's look where that supply was introduced. Meaning we get one break to the downside right here. We look for the lower high, and then we look for the second break. That's going to put in our double break of structure, market maker M, right? Distribution, accumulation, all of those statements and those names are going to come into place within this move right here. So we get that break to the downside right here, right? This is your high that causes this low right here. Your candle before that candle lies right here. And now you have your accumulation to then distribution. All we did was mitigate areas of supply. Remember our drop base drop. We created that supply, and then we continued to the downside. So let's look on lower time frames. Delete that. Let's look on lower time frames as well. Where did we run highs? Where did we break structure to the downside? Well, we can see we were manipulating lows. We can see we ran highs right here. And then we can see we broke structure to the downside right here. Where's the confirmation of that break? Second break right here. What started that? This area right here. That consolidation before the breakdown, right? So now that we understand that this high caused this low, we are looking at it from a market structure perspective. Or sorry, this is the most recent high that caused this low. From a market structure perspective, we are looking for the lower high and the continuation to the downside. From a Wyckoff perspective, we are looking for now the manipulation of highs while we mitigate areas of supply, leave lows, and then we look for the break to the downside. So let's look within this area. We manipulate lows. We're leaving highs. We take out the highs. Shorts are not out of their trades. They are trying to long, take this to the upside. What does that do? Give us the ability for now highs to be manipulated, lows to be left behind. We come up to our area, break structure with displacement. We can see that occurred right here. All right, and then we came back up into those areas. This is the 15-minute chart. We can go on a higher time frame here in a second. But we broke structure to the downside with displacement, right? And then after that, now all time frames are in alignment. Candle before that candle on the higher time frames lies here, right? And then we see that final continuation to the downside. So now we understand this to be a continuation to the downside over an accumulation, right? Because many can look at this and say, oh, this is actually a distribution to an accumulation, right? So they're looking for reaccumulation. They're trying to take this to the upside. But for rally-based rally scenarios, I look to play them following the accumulations, and for drop-based drops, I look to play them following the distributions for the continuation as far as that goes. But I don't want to confuse you guys with too much as far as redistros and reaccums go. I kind of want to leave it at that. for the understanding of what the behavior is going to look like. And when I mean go to lower time frames and you can see this happen over and over again, I mean that. Let's go to our daily chart. Within this wick, there's accumulation on lower time frames, right? Let's go to lower time frames. Manipulation of lows, left the highs, distributed, accumulated, continued to the upside, right? We can see that happened within here. Where's the rally base rally? Rally, base, rally. We can see the reaccumulation that happened right here. Let's look on lower time frames. Candle before, reaccumulation, right? We have a consolidation within this area as well. Let's look on lower time frames. Oh, looks like we liquidated lows, broke structure to the upside, continued to the upside. We created demand within this area. Now we can see that reaccumulation on the 1 minute too. Came back into this area, accumulated on the 1 minute, reaccumulated on the 1 minute, continued to the upside, right? This literally happens on every single top, every single bottom, every single continuation. Wyckoff is present. There are manipulation schematics to get the traders who are just trying to trade either this mindset, right, to get those traders out of trades, to get support and resistance traders out of trades, to get as many as possible, right, out of the market through either psychology or through just plain candlesticks, right? That is the goal of these Wyckoff schematics, is for manipulation, to get as many traders out as possible, so more liquidity is now available to the algorithms and the institutions that are moving said asset, right? And now that it is available, and it is coming down to areas that sponsored the move, so where institutions entered before, right? Now that it is coming back to that area, they now enter their trades again, right? Manipulate price to make it look like it's going to the downside, and instead it continues to the upside. And we are either left behind, right? Or now we can understand and we can enter these trades and start to take them to relative take profits. So with that being said, that was Bitcoin. We did our redistro, we did our reaccumulation. We'll talk really quickly about how supply and demand is created. This was a pretty simple one that we've talked about before, but we'll just go real quick as far as how it is made, right? Because I talk about, oh, look for this, look for that, but how can that actually be found? So, supply and demand, how is it created? From the liquidity raids and from the breaks of structures, okay? So once the raids occur, once all either shorts or longs are out of their trades at that certain amount of time, we look for that displacement with volume. And then we look for what caused that, right? We look for the sponsorship of that to then enter off of with the algorithms and then target the opposite side. So meaning, within this scenario, right, we are still redistributing. You guys can see we had an accumulation. We ran the highs. We broke structure to the downside. And from that, we saw this move to the downside right here. So let's look on our lower time frames and look where that supply and actual demand was formed. So we need the liquid, right? And we need a break of structure for that supply or demand, sorry. So what happens within this scenario right here? Where's our liquidity rate to the downside with volume? All right, we can look in here. We see the volume on this downside move right here. We see the lick rate. We see the volume on the lick rate as well. You don't actually need volume, but it is a very helpful analysis as far as understanding Wyckoff, right, for the introductions of that algorithmic liquidity. Meaning this was our lick rate, right? We saw that with the volume, and now we can see it from this perspective as well. Meaning we rated liquidity to the downside, this entire move to the downside. Algorithms pushed price to the downside right here. They pushed price to the downside to liquidate these lows right here. So they're in short positions right here, right? Or within these areas, within these areas, within these areas, they are in short positions, moving price to the downside. And what do they automatically do? They start to buy that back up, right? So now that that has occurred, they have short positions in drawdown, right? Short positions in drawdown, short positions in drawdown. Longs are in profit, longs are in profit, right? Now let's bring our short positions back to break even. Now that they are brought back to break even from where they entered before, right? They enter again. Now we see that impulsive candle, that break of structure to the upside where that occurred and where that makes sense, right? So this is how algorithms and institutions are entering price or entering these assets, right? So we see the move to the downside, the liquidation rate. Whereas your first introduction, right, your institutional candle, so this entire down move is actually considered an order block from ICT. I like to use the last down move before the up move as far as institutional candles go. But we have our last down move before the up move. So algorithms and institutions entered within this area. right? So this entire area can be used as an order block, as demand, as whatever you want to call that, right? So now we have to wait for the liquidation of the early longs trying to get into trades, right? And then once that occurs, we look for the continuation to the upside. So, or sorry, late longs, meaning this was your early longs. Early longs are in trades. They're taken out of their trades. They're now short bias. They start to short. And what does it do? Take them out and reverse on them, right? So your area that created demand following your liquidity raid, we get a break of structure to the upside. We have one, the institutional candle. Now we look for the mitigation of the institutional candle, right? And a push away from that to show that demand was created. So now that this high came in formed, we look for the second high to be formed. We get a second high that is formed right here. So now that shows demand introduction. Now what am I looking for? I'm looking for a liquidity raid. So the final manipulation following a mitigation of our demand. If we notice, we have equal lows within this area right here. What does that do? Takes out all of the late longs that we're now trying to get into longs right here, right? And they try to short this to the downside. What does that do? Give them ability to break structure to the upside. Now you have your candle before candle entry, right? Your full confirmation. Second break, you can wait for lower time frames as well. But within these scenarios, right, now we know how that demand is created. Now we know that following a liquidation raid and a break of structure, the mitigation of that and the final liquidation and then the final break of structure, I now have that area to look to take a trade, whether it's upside and or downside. This is going to be shown on literally every single time frame, from higher time frames to lower time frames. So understanding how this behavior occurs is very important. Myself, how I personally trade, is going to be looking for this exact behavior over and over again from my weekly time frame to my 1 minute and sometimes even the seconds time frames. What does that allow me to do? Now let's understand. This is going to allow me to hold a higher time frame chart, right? A daily chart, a 4-hour chart, a 8-hour chart, even a weekly chart at points in time, if I have it up to the weekly, right? And enter on a 1 minute chart, because now I have confirmation from a weekly to a daily to a 4-hour, right? To a 1 hour, all the way down 15, 5, 1, 15 second, 5 second, 1 second, right? I have the confirmation of now every single time frame within alignment showing the same exact behavior. So now I can enter a 1 minute chart and hold for a weekly time frame. If I have a weekly break of structure, we come back down. The daily shows the same exact thing. We come back down. The 4-hour shows the same thing. We come back down. 1 hour, so on. That's how I look to enter swings on lower time frames and hold for higher time frame narratives. This will greatly increase your risk to reward greatly, and allow much more profitability opportunity. But this is how that supply and demand is created. This is how this demand was created for Bitcoin. This is how we could have looked to spot it, right, within these scenarios and look to take this trade within this point in time. So as far as liquidity goes, right, as far as supply and demand goes, I'm always looking for the new introduction. That's why I don't have old zones that are marked, right? It's institutional market structure logic versus just simple market structure logic, right? Because that puts you in this mentality. And what are you going to do within these scenarios? Get manipulated, get liquidated, and then end up not being on the right side of the market. But understanding that we have now placed all these components together. I've placed Wyckoff together, I've placed supply and demand together, and I've now placed these market structure perspectives together as well, right? So I now have 3 perspectives. I can look for the impulsive move that breaks structure. I can look for the mitigation of what caused that, and then I can look for the confirmation. That now gives me, right, that step-by-step process to now simplify it in the most simple way, most comprehensible way for myself, right, to be able to take these trades with ease and with comfortability and walk away from it, right? This is how we want to get into those scenarios. But understanding how that supply and demand is formed is going to be very, very, very important, right? So we talked about demand right here. We can see the battle between supply and demand, how that works, and then where we can look to capitalize off of that, right? But again, I don't want to crowd you guys and flood you guys with way too much information on redistributions and reaccumulations. At the end of the day, this is going to be something that you have to go in yourself and see these on the charts yourself, see this happen in real time to get that understanding of how price moves, right, within these scenarios. So that, very, very important. We talked about liquidity. Now I want to talk about how we can continuously stay on the right side of the market with an institutional perspective. Right? So I talk about the continuation theory a lot. I talk about the disapproval theory a lot. But I want to see how we can put that into place. So meaning, let's look at XAU real quick. Let's look at this long that we had in place right here. Months. We went over this, I don't know how many times, right? With all of these certain, let me just take off all these alerts. If it'll allow me. No, we'll do that later. But we talked about for months, right? How gold was looking for that sell side liquidity at 1670. Let me just go ahead and put that out. My line. Yep, so we have our trend line, that's 1660 liquidity that we were looking for overall, right? On XAU, over and over, we were shorting, right? Because structure wasn't showing that bullish nature yet. It was not showing that bullish nature yet. So where can I be considered wrong and where can I get opportunity within this trade right here? Let's look at what happens when we liquidate the lows. So now that all trades, I'm going to just get rid of these alerts. Apologies. We could take off these. Take off this one. Take off this one. This one as well. My fault. Okay, so let's talk about what happened when we came into this area. Let me just get rid of all of this as well. But how can we continuously remain on the right side of the market and look for these trades the opposite end, right? If we are on a bullish or bearish nature, bullish or bearish side, right? Let's understand what happens within this area right now. So now that we have liquidated the longs, right? We came down into this area, we liquidated longs, we look for the break of structure to indicate a daily pullback within the scenario. Why am I saying a daily pullback? Let me just take this out as well. But a daily pullback, as that is the most recent supply that caused our most recent breakdown from lows that caused new highs overall. We can see that this was formed. We saw the accumulation to then distribution, ran the highs, mitigated areas of supply, continued to the downside. Exactly what we were talking about, right? Within this scenario, we have our drop, base drop, area of next supply to look for price to come into to continue to the downside. So if I wanted to take this long to this supply zone right here, how would I be able to do that? I need this first. I need this break of structure first to take it to the supply zone. So the most recent supply from our breakdown, right, occurs over here. I was looking at buy side liquidity within this area to take it to. Based on our structural narrative. And what do I mean by that? We have a daily break of structure to the downside. To look for the pullback, we're looking for a 4-hour break of structure to the upside. Where does that occur? Right here. We get a break of structure. I'm looking for the confirmation of an hourly higher low once we come into those scenarios. So the same exact behavior that we were looking for before, we're looking for now an hourly within this area right here. So let's go to an hourly. Let's look within here. Where's your break of structure? We get a high that causes a low. Structure break occurs right here. This candle is my area of interest. This is where I'm looking on lower time frames for the full confirmation to now take this trade to the upside. Let's see where this occurred. So from now the hourly to the 15-minute. All right, we get our break there. Where's our 15-minute break of structure to the upside? Right here. Why is it right there? Drop, base, drop. This high was a redistribution on lower time frames. Let me show you what that means. Go to the 2-minute chart. Accumulation to then distribution. Right? We saw the accumulation to then distribution. So now we see a break of structure to the upside after we mitigated areas of demand. So now I'm looking for the full on confirmation after we come into areas that sponsored that move overall. Right? So now on the hourly chart, we can see that break of structure upside. We saw the 15-minute chart as well. We now broke structure to the upside. You can look on the 5 even. All right, and then let's look for that break of structure. So now that we get the 5-minute break of structure from the 4-hour to the 1 hour to the 15 to the 5, And then now lower time frames, once we come in within this area, right? 5-minute break of structure. This is all 1 minute or lower time frame price action following. Okay. So after the 5-minute break of structure, we have our candle before candle that caused that break of structure. Now all of these lows are considered protected lows. Why? Institutions. They're not going to bring this back, right, based off of our structural narrative, to take themselves out of trades, because they are proving that they want to go to the upside. They are proving that they want the buy side liquidity over the sell side liquidity currently. So let's bring this back. Let's bring this back just one candle there. We'll go on our lower time frames, and we'll look at this. Okay. So I personally chose the 50% of this fair value gap within this area right here. You can choose to wait for lower time frames, right? I chose this to look at it for a point of interest. I ended up entering on a 5-second chart with stops underneath this low right here. But let's look at what happens when we come into this area. We want to look for, again, right, the manipulation of lows, leaving highs behind, and then a break of structure for the final continuation. So we can even go to the, no, let's just stay on the 1 for now. Okay, so we'll play a few out. We start to come down. We're liquidating lows. We're coming back down into areas that sponsored this move overall. Look at the institutional candle. Notice how the institutional candle falls in line with your fair value gap, right? So a lot of these instances and a lot of these cases, you'll notice that all of these concepts can be literally the same thing, but a bunch of people, right, are taking it on their own, putting different names on it, and saying it's special, it's new, when it's not. This has happened for years and years and years since the market has been around. Since the market has been the market, prices moved like this, and it will not and it will continue to move like that. Why? Because 90%, 90 to 99%, right, fail, and because they are manipulated out of their trades. So they are the reason that the market is still here today. If 99% won, then the market would not be the market. That would not be possible, right? So we need to understand that to be that 10%, we need to do what the 90% doesn't do, and go in and do this work. Go in and put this work. Go in and have this patience to wait for these instances like that to make what they don't make. If you want to make what the 90% makes, feel free. By all means, go ahead and do what you want to do, right? But if you want to have that edge and have that analysis and have that ability to walk away from your charts clean, right, and not have to worry about them, not have to sit down at them, then do more work. That work is going to put in more time efficiency. Now that I've waited all the way up until this point, when really I was just setting alerts at all of these, right? Setting alerts, walking away. Setting alerts, walking away. Let's take this out right here. Right? I get this impulsive move to the upside. I set alerts, I walk away. I get this impulsive move to the upside, confirming this area of demand. I set alerts at this zone, I walk away. Right? What happens? Now that my alerts are hit, I'm looking for accumulation within my zone. Accumulation occurs within my zone. I set my alerts at the institutional candle, and you can walk away, right? But obviously this is a 1-minute chart, so we'll look at the entry once we come down into these areas. Looking at our lower time frames, right? Focus on the market structure. Don't focus on the spottiness of the charts. Don't focus on how quickly they're moving. Focus on the market structure, because that is what is going to be shown. We are now on a 5-second chart. So once we come down into our area of demand, right, here's your inducement to the upside, your equal lows that are being formed. Very, very good. What we want to see coming into our areas of demand or supply. Why? Because we're going to liquidate traders and mitigate that area. So that's going to prove, right, or give us an ability for price to move very, very quickly away from these areas right here. So let's look at what happens. We take out those lows right there. We create a high. We get our break of structure to the upside. Candle before lies here. I have my entry, right, and then I have the ability to hold this for a higher time frame. Obviously, I could have held this, right, at a 5-second zone right here. Personally, I did not mind the risk on the higher time frame zone that I was holding for this certain trade. But let's go ahead and take a look here at how this occurs. Go ahead and delete this. And we'll look at the reaction off of the zone. So now that my H4, my H1, all the way down to my 5-second chart are now within harmony, they're now within time frame, and they've all shown me the same exact behavior, I am now entering, right, targeting that H4 narrative. And what is the move we see directly after that, right? We just see price run. And that's exactly what we want to see when we enter these from our higher time frames to lower time frames. So now all the work that I did up until this point, right, allowed me to now trim on lower time frame highs and lows, to trim within these areas, and let it go, be completely fine. Meaning, now that I've trimmed, I am good for the day. I've profited for the day, maybe even the next couple days, right? Depending on the R&R, however it was. But now that that has happened, I have made my initial, right? And then now that that has occurred, I can hold for that higher time frame 4-hour narrative that is being shown. But here I was looking, right, for just this high right here, most current high. And yeah, you can see how that formed, right? You can see exactly what happened following the mitigation and the final continuation. Price just runs away at that point, right? It's just continuous higher high, higher low, and we move to the upside. Let's talk about reaccumulation. It's going to occur right here. Right, obviously, this is drawn out already. Let's look at our market structure when we come into these areas. You can do a 15-minute or 5 minutes, sorry. All right, your W, again, your next introduction. So we get a liquidation rate to the downside. We get our first break right here. Confirmation of that break right here. Candle before candle lies right here. We get the mitigation continuation overall. Right? It's literally the same behavior, the same thing over and over and over again, from our higher time frames to our lower time frames. And I'm going to sit here, I'll come on chat, and I will come in stream, and I'll say this every single time, because that's really what it is. There's nothing else to it. There's no specialness or edge, right, to it. It is just what it is. We look for the same thing over and over again. Once that occurs, we enter our trades and walk away with our higher time frame narrative, right? So, with that being said, how was I continuously on the right side of the market at this point in time? Right? How was I continuously on the right side of the market at this time? What does that mean, right? Shorting, 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 shorting. H4 break of structure to the upside. Uh-oh, daily pullback, right? Uh-oh, now I'm continuously on the right side of the market because I've been shorting, 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 shorting. And then even if you went down to these areas, right, and you looked for your next short in your next area of supply, what happens? Your supply zone is violated. So what does that tell me? I have now introduced demand instead of supply, right? Where do I look for the confirmation of that? Within these areas. Once I'm confirmed, I take the long, right, targeting the next area of supply. So now we can see how these scenarios can become simplistic. It needs to be something that you go and you can look and find that clarity within these charts every single time. I'm going to go ahead and take a look at stream chat, my mentions real quick as well. Evo sent me something. Let's take a look at stream chat. And then if anyone has any questions or anything like that, definitely feel free to ask me right now, and or unmute your mic, right? Ask me in stream chat, wherever it's at. I do have some time if we want to go ahead and take a look at some charts right here. I will do a little Bitcoin analysis real quick, and then we can go ahead and end this. But from what I wanted to tell you guys today, as far as the introduction to SMC goes, please keep it simple, because we talked about a lot today, right? And we talk about a lot every single session. But to keep it simple and to take all of the analysis we just did and instead make it impulse, right? S&D and then confirmation, I now have much more ability to allow for that clarity to enter my trades, right? And not get overwhelmed within these certain scenarios right here. So let's go ahead and take a look at ETH and Bitcoin real quick, what we're looking for. So for ETH, I'm gonna go ahead and just do ETH real quick. I'm still looking for downside overall, right? Obviously we are starting to show some demand introduction within these areas now that we have liquidated, right, these longs from the downside over here. We talked about this trend line liquidity that we were building up within this entire scenario. We talked about this area of supply. We talked about how we came up to this, rated the highs, introduced supply, and instead broke structure to the downside. And we are still holding that structure currently. For those that are catching the longs, great job. Beautiful job by Casper, right, on that long call right there. But personally, as far as longs go, I still haven't gotten my full confirmation. I still haven't even had any bullish structure yet for me to take my trade. So I'm still looking for the daily to the 4-hour, so on. And until that is being shown, I'm just going to start to continuously short, right, within these scenarios. So we had a redistribution. We had another break of structure to the downside. Your next area of supply was within this 1440 area. right? And we could definitely see another lower high being created right there, and the continuation to the downside at this point in time. I would look for an hourly break of structure once we come into these areas for the continuation to the downside. We could easily see another accumulation to the distribution. If you notice, we seem to be taking care of almost all of this price action, right? We're leaving some imbalances within these areas, some imbalances within these areas. But once we start to take care of all of this, meaning all the wicks are showing that they are filling these areas, right? That's how you can also get an ability to understand if it is lethargic or not, if it is just inducing or not, right? We can see over here, same exact thing. So after we had the liquidation of the lows right here, the lethargic moves to the downside, right, show that little quote unquote creek forming. It shows the inducement occurring. So people are trying to take shorts to the downside, right? And then they get taken out of their trade. So what do? They flip long. We can see the equal lows that are being shown from them flipping long. And then what happens? They're taken out of their trades following a lower high, lower low, lower high scenario, right? So definitely, please just try to keep it as simple as possible. As far as these concepts go, because they will be very, very, very confusing. Understand that we can't just use one on its own. So just like EMA trading, right? We don't just use the EMA. You use EMA, you use divergence, right? You have multiple confluences that come into play. Fundamentals, even. You see these traders out there, just these successful traders who are even trading, right? Support and resistance, or however they are trading, they all have multiple confirmations. So if we can take that mindset and we can bring it into this institutional mindset and now have multiple confirmations from time frame to time frame, I now have the ability to gain much more profitability in much less time, right? So that's where that time efficiency comes in. But with that being said, that was pretty much all I had for you guys today. Tomorrow, we're going to get into more setup analysis. I'm going to start sending out some setups for the week, what I like, what I'm looking for. And then if that is not being shown, right, so we'll get that done tomorrow. And with that being said, thank you everybody who had joined. This was recorded. This will be posted to YouTube once I am done editing. And if you guys have any questions, feel free to ask them now. If not, no worries. And I'll go ahead and end this here. But thank you all again. And I hope you all have a great, great night. Yeah, I think that'll do it. All right, peace out, guys. Appreciate y'all.